Jeff, are you worried?
This is not good news, but it's something that we've been expecting for some time. We knew there'd be another, but there was going to be a race between COVID cases and a vaccine, and we weren't sure who was going to win. Well, it certainly looks like the cases are winning, but this is a little bit of lockdown light, and we know it can work. We just saw a 4-week lockdown in Israel be very effective in dropping the number of cases. This is a similar, somewhat discretionary lockdown in France and maybe what we'll see in Germany and a few other places, but it may work. And that's important to what it means for the markets, because the obvious conclusions may not be where you want to go here, meaning that the more cases you see, the more lockdowns you see, and therefore the worse stock market performance by country for a few reasons. One, a rising rate of hospitalizations and deaths may mean more for garnering support among the population for these lockdowns than simply a rise in cases. We are seeing some places where the healthcare system is overburdened. You just mentioned in France, Spain as well, heck, Wisconsin also. So you can't just look at Europe and go, I don't want to be there. I want to invest in the US. We're seeing that too. The second reason is the more restrictive lockdowns don't necessarily mean worse market performance. We've seen that this year. In fact, the best performing market this year is China, where they implemented the most aggressive lockdowns earlier this year. And finally, it really matters where manufacturing is versus services in your economy, in your stock market. These restrictions are targeted really on services, restaurants and bars and entertainment, not manufacturing. Manufacturing is booming right now. Manufacturing only makes up about 17% of the global economy, so it's not enough to reverse the weakness, but it's more than 50% of the stock market globally, and that means profits may do very much better than the economy. So all of this matters. So the conclusions are not that simple that you can just look at cases, say, rising in Europe and the lockdowns and say, I shouldn't be there. In fact, yesterday, Europe stocks outperformed U.S. stocks. So that's something important to keep in mind in the investment impacts of these lockdowns.
If we just look at services versus economy, just simplify it to that. I know it's much more complicated, but services versus manufacturing. It seems as though services not only drives the world economy, it drives the world markets as well. Is there a case to be made, because manufacturing will not be as readily shut down in this, that manufacturing type companies will do better? We certainly haven't seen that over the course of the last 6 months. It's been big tech.
Yeah, you're right about that. It's been tech has been leading the way the whole time. But what's interesting is what we're seeing underneath the surface. What's going on with the average stock? You know, so far this year, the All Country World Index, excluding the U.S., so all international stocks on an equal weighted basis. So looking at the average stock, is outperforming the S&P 500 on an equal weighted basis by 200 basis points this year. That's the first time that's happened in a long time. So there are a number of things happening underneath the surface. And one of the reasons for that, Dom, is more manufacturing. There's more of a cyclical exposure in Europe. Yes, that can hurt if we go into global lockdowns and a renewed recession. But if this is weeks and not months of a lockdown, I think we could actually see these companies do better. Manufacturing is booming around the world. We can see that in the shipments for this holiday season, which have to get to Amazon distribution centers by November 6th for Black Friday and Cyber Monday. Absolutely huge amount of product being moved around the world on ships. So manufacturing is booming right now, and that's very important to looking to those companies that may weather this downturn a little better.
What's the driving force? What will be the driving force behind markets post-election? I'm looking towards mid-November and beyond. Is it going to be that U.S. consumer spending picture? Should we be paying more attention to those projections of how much money the U.S. consumer will spend around the holiday shopping season?
I think that's a very wise point. You know, one of the things, certainly a full-blown lockdown could mean a return to recession, even in the U.S., but these restrictions may have less impact. Yesterday, the French consumer confidence number fell 1 point in October from September. That was slightly above expectations. It returned to where it was in July and August, which was, of course, after that first wave of COVID and when the stimulus was being put in place. Consumption may take a hit, but it's noteworthy that even French consumers are more confident than the government. So watching consumer confidence is going to be very critical here, especially for manufacturing and that demand for product.
Shepard Smith here. Thanks for watching CNBC on YouTube.